Rajan's parting gift may well be to the bond market. Speaking exclusively to CNBC-TV18's Latha Venkatesh, recently retired Deputy Governor H.R. Khan said that the RBI is planning to allow banks to offer corporate bonds in the repo window, although with some haircuts. In fact, I am joined by Latha now, who spoke to Mr. H.R. Khan. Latha, can you tell us the highlights of your conversation?
Well, the most important reform that is likely to come from the Reserve Bank is allowing banks to borrow money from the Reserve Bank by not just giving government bonds as collateral, but also corporate bonds. Now, let me tell you, this was hinted by the governor in the last monetary policy, and he also said that the H.R. Khan committee, or H.R. Khan himself, will look into it. That would be the last task before H.R. Khan, before he retired. And even as Khan retires, we understand from him that this is one of the recommendations that has been made to the Reserve Bank, and the Reserve Bank is working very seriously to ensure this is done. If that is done, there will be a desire for banks to hold corporate bonds because they can collateralize with the Reserve Bank and borrow money. There'll be an advantage. It will not be an instrument which is just locked up. It will be an active instrument. So that will be a very big boost to the corporate bond market. But there are other quivers in the RBI arrow provided by arrows in the RBI's quiver provided by Khan himself. Apparently, the Reserve Bank is looking to allow FIIs to buy unlisted bonds. At the moment, they can only buy listed bonds. They can buy unlisted bonds and what you call pass-through certificates, which are created when NBFCs securitize their loans. Basically, it means more foreign money into the non-government bond space, more places where Indians can borrow from foreigners. Also, they are looking to allow brokers to participate in the repos. They are looking to allow the credit rating agencies access to credit bureaus so that they can rate better, they get more information. Also, they may allow the credit rating agencies to have access to what is called the CRILIC, or the Central Repository of Information on Large Loans. This is a repository which is only with the Reserve Bank. It has details on all large loans across banks, across borrowers. It's a confidential information, but if rating agencies are given a peep into it, they will be better able to rate companies and alert people about companies that are likely to default. So all this will mean better bond market information, and that can give a very big boost to the bond market. However, this tussle of allowing corporate bonds in repo requires some legal settlement. One is not very clear if the RBI is allowed to buy any paper other than government paper, and that's what Mr. Khan told me.
That would be a major change in terms of, we are only taking sovereign paper so far as the repo is concerned. But if you see world over, there are central banks, whether it's unconventional monetary policy or quantitative easing and all, they have gone for corporate debt paper and part of expanding their balance sheet. In RBI, we have been conservative, and rightly so, because given the illiquidity of corporate bond market and credit risk that may come on us, and it probably may have impact on the balance sheet. But we have to move on in the sense that if you want to develop corporate market, we have to do something which really will be a game changer.
And you can catch that entire conversation at 10:30 a.m. on Saturday and 11 a.m. on Sunday, only on CNBC TV18.